Welcome back to another video, guys. Past couple of weeks have been moving crazy. However, we might just be having the drop we've been waiting for. As usual fashion, let's go through the weekly time frame, daily time frame, 4-hour time frame, and then we'll also go through 1-hour time frame to show you how I'm looking to get into positions. Hopefully you can take some of these positions as well, because this might be a very good move for us as the markets start to drop, given the news that we heard over the weekend from the Israel strikes and Iran. So let's see what the markets can hold. First, we're going to recap what happened last week. Then we'll go through and see what's going to happen or what we're expecting to happen next week. So first of all, let me get rid of this and start afresh. Here we go. So the only thing I have marked out is this red line, because this was the monthly retest. As we broke above this monthly previous high, we came back and retested it with the wick and shot back up. Now, the reason I have this, this is the monthly demand level, that we left when we had this big impulse up. We did not retest that demand level. The blue is the weekly demand level. So we could come into either this level or this level. But that's where I'm hoping for price to go back to. You may ask yourself, why do I expect price to go back all the way up there when we've had bullish momentum? Well, that's what we're going to go through now. And the first thing we're going to do is just try to keep it kind of simple in this video. It won't be too complicated, just to keep things a little bit simple and linear. So the first thing you'll notice is we had bullish impulse and bullish structure all the way up, high highs, higher lows. We tested the previous low, tested the previous high, broke below the previous low, retested that previous low turn resistance, had the drop down, retested this monthly retest from the previous all-time highs. We've then had a bullish momentum come back in and push us straight back into these previous resistance and this previous weekly high of the candle that led us down to that retest. Okay, so we've had, if I just quickly move this out, we had bullish momentum, higher highs, higher lows, a break of that low, a retest of that low, and then we've had the push down. We're now having a retest. The reason why I think we're still bearish, or in the long term this is because we had this candle here that brought us all the way down. As you can see, we've wicked into that level once, not 1 week, not the second week, and the third week. The fourth week tried as well, but it couldn't close above where the 19th of May started, where that wick was formed. Then last week, again, we pushed all the way up. We failed to close above, and now we've come all the way back down. Almost the same size or more sell volume actually than the previous week. It's not a complete bearish engulfing candle, as we did not close below where the previous week opened, but we can see that in terms of sell volume, the candle is bigger than the bull candle. So all we're waiting for to see now is to see the rollover on the lower time frames to see how price is going to be forming. And remember, I always talk about volume switch. So we're going to go over volume switch as well to give us indication of why we think this market is still going to be bearish. So again, quick recap, we've retested it, but I'm hoping for price to come back down and touch these weekly and monthly demand levels. And also keeping in mind that when we're forming bearish structure, we don't go past, when we retrace, we don't go past the high. Once we break past the high retest, we then become bullish. So as you can see, this is the high. We failed to close above there, and looks like we're rejecting again for the second time, because we had the first week reject here. We've had the weekly retest try again to push above, and it's just failed, and we've had another bearish push down. So now let's go down to the daily time frame. So on the daily, what do we see? Let's mark out some levels. This is the high that took us down. This is where it started. It came down. This was the test. So therefore, this is the level that we had marked up. I'll take this green level off. So this is the zone that we failed to close back above. Let me just move this, make it clearer. So the daily time frame, same thing has happened. We've had the bear transition down. We broke below these previous weekly lows. As we said, we retested and dropped down, followed by impulse, correction, impulse, correction, impulse, correction, impulse, correction back to the lows. Then we've had this retest, because this was actually a break of the lows. Let me quickly just get rid of this, sorry. This, if you notice, we've had impulse, correction, impulse, correction, impulse, correction, impulse. This correction is actually an impulse because we broke below. See this bear candle here, the black candle. It closed below the previous lows. It engulfed this candle. So this is actually a previous low break. So this is what I'm actually looking at as a retracement. So do you see how price came up a lot more steadily? It was more in corrective fashion. Look how many days it took compared to this drop to go back up. Usually the corrections are actually longer. So as you can see, I'll get rid of that as well. As you can see, this impulse was very quick and very sharp. It broke the lows. The retracement was a lot slower, which is what normally happens when you're bearish. When you're bearish, again, we'll see a quick example, like, let's zoom out a little bit. We're bearish here, handful of candles, let me guess about 8 candles, but then look how long this takes. Look at the time it takes to then come back down again. Retracements are always slower. So if we just quickly go back, we've tapped into the high, which we expected. We did have a weekly supply, daily supply in there, which was this level here, which we tapped into. And of course, we've been trading in that zone. We haven't closed above. So we've tapped those highs, the highest area we can go to before this trade becomes bullish, long term that is, to go above the weekly. We've then had a rejection off there with a bearish 1 to 3 pattern reversal, small rejection, and then another bear push down, broken those lows. Now we've had corrective price movement. After we've had all this price movement, which is corrective, we've had multiple areas where liquidity has been created and then stopped out. Liquidity has been created and then swept away. So now we've just had this bear candle, this bearish engulfing candle, which we just had on Friday, as per the Iran and Israel strikes. So after this big bearish engulfing candle, what do we expect? Because again, we've broken this low. We've broken this daily candle, which was the last box trading range. So you can see the bullish candle came in, couldn't close above. This day tried, which is Monday, we tried, couldn't close above. Tuesday we tried, couldn't close above. Wednesday we tried, wicked all the way up, couldn't close above. This was liquidity being swept. Thursday, again, we came back down, some bear momentum, pushed all the way back up, couldn't go anywhere. Bearish engulfing candle is now closed below this, which is a bearish engulfing candle. So now we've left behind this daily supply level. So keep that in mind. Get rid of this. So that's the daily supply level. I'll also put that in the background. So now we're going to go down to the 4-hourly. 4 hour, we can see this, as I mentioned before, impulse correction, impulse correction, impulse correction, and then the last impulse, then this would have been the correction, but we came down, and this is the low, tapped those lows, retraced, we came even further down, which is a break of these lows, which means we cannot go past this high for this to stay bearish, which we maintained. So we had these highs, you can see these wicks, liquidity was created above this area, liquidity swept. Price came all the way back up, retraced, came all the way back up. Then we had a lot of sell side volume, just like this. Sell side volume came into these lows, wicked below, and then it just ranged for a while. Then we created this wick and this wick, which looked like this wick and this wick, which looked like liquidity again being presented. You can always tell when liquidity is being swept because of the amount of volume that comes in after liquidity is being created. Came in, swept that liquidity, and then we rolled back over. Again, bearish engulfing candles came in, retrace, more wicks created here. So now there's a lot of resting liquidity in this zone here. Price came back down with this huge bear candle. Zoom in, huge bear candle. Came back up, bullish engulfing candle, retrace a little bit, played around, and look at the volume again. Once liquidity was being swept, huge volume, swept the liquidity here as well. And then lastly, same thing happened. You can see here the range. So of course, liquidity is being created above these wicks here because people are placing sell trades in that area. Again, volumes come in, swept the liquidity, again, failed to close above and retest and continue. We then had this bearish move down, tested the low of that range. We had bullish momentum up, which is the test to see if we can actually keep and hold and close above this previous level. We couldn't. This is where the bearish engulfing day came in. So what we're actually hoping for now, because we've also left behind this 4-hour supply. So I'm hoping for price to trade back into this zone for our supply. I'd be very pleased if I see a retracement coming next week, and then we can see a rollover, and then we can look at volume switch when that happens for the rollover. What's volume switch? As we mentioned before, look at the size of candles going up, size of candles going down. Bull candles are much bigger than the bear candles. After the range liquidity has been swept, bear candles become bigger than the bull candles. Bear candle becomes bigger than the bull candles. Bear candles become bigger than the bull candles. So I hope that makes sense. This is when you can see that volume is turned around and sellers are now in control, as well as the single candle of the daily being a bearish engulfing candle, which again signifies a turnaround in the market on the higher time frame. So again, I'm looking for price to trade into this 4-hour supply and then drop. Now, this is US30. US30 could easily just drop and then just retrace a little bit and then just continue dropping. Something to keep in mind as well is because this leg would be the second leg. Let me quickly run to the daily. It'll be the second leg of the crash. So that means it's going to be faster than this leg. If I take you back to all the other crashes, you can do this, back test quickly as well if you want. On yours, the first time we broke below, like this one here, look at the time it took for this drop, but this drop was quicker, and the last drop was even quicker still, if you can see here. So just keep that in mind. There was another one, no, Chad hasn't got that. So yeah, so keep in mind that whenever you have the second crash, it's always a lot faster. In fact, let's put that in a weekly time frame, it'll be easier to tell. Yes, there you go. So we had this crash, this first, like this was 2022. Drop down, retrace, drop down, broke these lows, retest. Then we had this initial drop. This was the second crash, the second drop. You can see that we had 1, 2, 3, 4, 5, 6 candles. Then we had 1, 2, 3. The volume of these 3 candles is the same or near to these 6 candles. Does that make sense? I hope it does. So that's what I'm trying to say is keep in mind that this one should hopefully be quicker, which means we may have price falling at a rapid rate. So again, we're going to ask ourselves, where are we targeting? What we're going to do is look across and look where we left clues. So where the daily was turning around. So we have this low. We're going to just copy that. We have this low. We have this low. And we have this low. And finally, we have this low. I'll put it here. We can refine those on lower time frames. Those are the areas I'll be targeting because we need to take out the lows as we're bearish now. Keep that in mind. So just keeping it really simple, as you can see, price has been moving bearish with bearish structure on the higher time frames. We've then had this retracement. That's a major retracement, which has taken a long time. We've come back to those highs, which we know we need to maintain. We've broken these lows. We've now had the retracement. Liquidity is being swept a few times, followed by a bearish engulfing candle. Classic setup. Yes, it's taken a while. It's a bit messy and choppy, but this is what the market is. Unfortunately, it's not very nice and easy. So if we go down to the 4-hour time frame, again, quick recap, where the bearish engulfing candle, we want to take out 4-hour supplies. 1-hour candle, we can see the volume switch a lot clearer now. You can see the size of the bull candles here are a lot, bear candles are smaller than the bull candles. Bull candles you can see are much bigger when liquidity is being swept. Look at the bull size candles. And when the volume switched, bear candles come in and they're bigger than the bull candles. Bear candles come in. Bull candles start coming back in for the test. Bear candles are way bigger, signifying the volume, taking out this supply level as well. The 1-hour supply level tapped into it nicely and dropped back down. So I'm expecting, again, price to hold this bearish momentum. We may do something like this and just wick in and then wick out. Or again, US30, could also drop back down. We can have a spike push into that zone and then just a complete leak, which is again very possible. Just keep in mind we need to hold this high. This high needs to be maintained now for us to go all the way back up, because you can see we've got a few wicks here. So this is the major high. I would not count this as the major high for this trend. This is the major high. We cannot go above here. Yes, we can trade above here, but we need to stay below this high. And that's really trying to keep it simple. Again, targets are going to be these yellow zones, these lows, where price turned around from, and we saw a lot of bullish momentum. Same again over here, where we saw price turn around from bullish momentum. Keep in mind as well, whenever we're moving from certain areas, New York, usually it's New York session that will be taking us out of that. And I gave that tip last time. You just see the time here. New York session is the one that put us in, took us through the test, and then we turned around overnight. We tested it and then dropped back down. But New York also took us all the way up here and is the one that caused this rejection. New York set this move up. It's always New York that sets the move.